Hey everyone, welcome back. My name is Zain, and today we'll be having a look at Gores Guggenheim stock, the GGPI share, and we'll be having a look at Polestar as well. So we've got an article here from Investors Place. So what do they have to say on the recent announcement of the confirmation that Polestar will indeed be merging with Gores Guggenheim? Obviously, it's now been approved by the SEC, and I do believe the merger will be taking place on the 22nd or 23rd of June. So before we continue this video, allow me to declare that this video is not financial advice. It's strictly for educational purposes and for entertainment. So as we know, Gores Guggenheim, the GGPI share, the company itself, it's a special purpose acquisition company that plans a merger with Polestar in the next coming month. So despite the low attention and low excitement, Polestar has definitely showed their commitment and just how serious they are at the moment. And so far in the first quarter of this year, Polestar has delivered over 13,000 electric vehicles, and this is all leading up to its merger next month. So since 2022, many EV companies have gone public. These include EV companies like Rivian, Lucid, who actually went public through a Spac merger as well. So here's what you can't do. Here's what you shouldn't do. Because of the lack of excitement around Polestar merger, we can definitely see that within the last week since the merger was announced, yes, more people have been talking about it, but there's still a lack of excitement, a lack of publicity. When you put into consideration the attention Lucid got, when you put into consideration the attention other Spacs got. But what you have to remember is that last year in 2021 and 2022, they were high in popularity and they were fairly new to a lot of people, despite the fact that they've been around for many decades. But what we're faced with now is in 2022, there's only one EV vehicle or EV manufacturer Spac merger that I can name, and that's Polestar for me. Maybe I'm a little bit biased, but I definitely think there's probably other EV companies out there who are merging this year, but there are none that I know of because most of the top players or most of the more popular players have definitely merged already, such as Lucid. Rivian went public last year with like a 90 billion IPO. But despite all of this, what you have to keep in mind is that Polestar is already generating 1.5 billion per year. Now, Polestar also has big ambition for the United States, given that they're building their Polestar 3 in the United States. And the Polestar 3 is an SUV vehicle and is perfect for the United States market. While the European market, typically places like England and France, they might like smaller vehicles. Well, in the Americas, they certainly do like big vehicles. And that's why Rivian has become so popular. They're big SUVs and big pickup trucks. That's what Americans typically like. So let's backtrack a little bit through our history. So debuting in May 2021 and announcing its selected merger partner in September 2021, Gores Guggenheim didn't wait long to make a big deal. It did, however, get into the game a little bit late perhaps. It became an EV stock at the tail end of 2022 and 2021 EV boom. As a result, unlike Lucid stock or even some of the EV SPACs like Fisker, GGPI stock never made a true to the moon type move. But before the SPAC merger, it's just there's a lot of uncertainty in the current market right now. But it certainly wouldn't take a lot to move the GGPI share. The market cap is roughly around 1 billion, which I believe is like 5% of Polestar market cap when they do go public. Polestar will be going public at 20 billion in valuation. But yes, last year, back in November, when the market was doing extremely well, Polestar certainly was doing well. The GGPI share was up around $16. That's quite impressive. But what you have to understand is that the entire market was doing particularly well at that point. Now, last year, Polestar made $1 billion in profit after all sales, almost close to 1.5 billion. Now, like I said, so far this year, they've delivered 13,600 vehicles. They intended to build 65,000 vehicles this year, but they've recently adjusted these numbers due to the fact that they're struggling to build as many as they want. So instead of building 65,000 vehicles, they are now targeting to build 50,000 vehicles, which is still 21,000 vehicles more than they built last year. So the revenue for Polestar will grow once again this year. It will have a substantial growth, perhaps even an extra billion in growth. So that's quite good to look forward to. I do believe that Polestar also had a pre-order over 21,000 vehicles for Q1 this year, but they only got to deliver 13,600. Now, as for long term, Polestar still determines to build and deliver 290,000 EVs by 2025, but this will increase their annual revenue to 17.6 billion, and that's in dollars, in an annual revenue by 2025. So the point is, while we're in a cooling market, while the market is losing its excitement around EV Spacs and certainly underestimating Polestar, you can be certain that this will still be a hit once the Spac merger is completed. Once Polestar deliver 50,000 vehicles this year, this will still be a huge deal for Polestar. You can be certain on that. You can be certain that the Spac merger will be successful, and I do believe the shares will do well. And the most important thing is that Polestar actually avoided this crazy market, because currently we're in a dip. We're in a huge dip. And it's so good to see that Polestar has actually avoided this market. But we have no idea how the shares are going to react and how the general public is going to react once the shares become available. So thank you for watching. Subscribe to see more. And of course, I will see you in my next video.